maybe we can start with a round of introductions for this panel, just to give a bit about our background. I was thinking myself, Fabio Aprag from Green Energy Venture. We are an advisor active in the renewable space. We like to call ourselves an end-to-end advisor from engineering to finance. But let's try to keep it short and crisp. Maybe we can go ahead, each of us.
Yeah, thanks, Fabio. My name is Max Füdrich. I'm with Aurora Energy Research. So we're a power market consultancy, and I'm focused on the German market and especially forecasting long-term power prices.
Thank you, Fabio. I'm Alessandro Berti. I'm Managing Director of FRV here in Germany. FRV is a global IPP and developer, originally based in Spain, operating especially in solar and batteries.
Anna Chmielewska. I'm working at the European Bank for Reconstruction and Development, and we are active in financing renewables and recently also looking at storage projects predominantly in Central and Southern Europe.
I am Mark Augustenborg Ødum, CFO in BET Energy. We're headquartered in Copenhagen. We are an independent power producer, developing, constructing, and selling powers via corporate PPAs.
So I'm Lars Josten. I'm having a track record with Be Green, which is a developer from Denmark and a former CEO of Pfalz Solar.
Yeah, hi everyone. My name is Hannes Langenhahn. I'm here for Arakari, which I co-founded and I'm the managing director of. We are a developer in Germany for grid-scale solar assets and now more and more co-location with battery storage.
Thank you everyone. So let's jump right in the panel. So the topic now is to highlight the investors' current appetite for renewable energy and energy storage. So I would say that probably the best way to start is with some generic overview over, let's say, what you perceive as the appetite for these two technologies. Maybe starting from the pros and cons. So maybe let's start with the pros. In your opinion, what fuels investors' appetite nowadays? And in other words, what is attractive for investors in today's renewable environment?
Fabio, maybe we start a little bit different because I know all of you had lunch. I hope it was good for you. And we're looking right now on the investors' appetite. But would you invest right now in renewable, and when will you invest? At which type or return on invest are you looking at? Maybe someone of you? So no one of you would invest in renewables?
What are you doing here?
I would. Yeah, that's why we're here. So
hello, good afternoon, everyone. My name is Jilling, and I represent KGA. KGA is a German investor, so we are asset manager with current asset under management about 16 billion euro, sorry. And we look at pan-European markets, and of course, we specialize in investing in renewable energy markets, and especially projects and assets. And in terms of return, it depends on different technologies. And for solar, of course, we know it's very mature, and also now the PPA price is reducing dramatically. So with regarding the levered IRR, maybe under 10, yeah. So it depends on different markets. And regarding BESS, to be honest, we have conducted deep search on different markets, and now we really enter into Italian market, and because it is partial contracted revenue. So and of course, we are looking at double digits, starting of 10%. Yeah. No, it depends on different market, yeah. And for example, in Germany, yeah, 6, 7, yeah. Yeah.
Thank you that you are the only investor. So, yeah, this reaction that I only find one investor. Let's see what I see, what our investors are looking at. So 6% return on invest in Germany. Yeah, that's a regular outlook that every investor has. But financing costs at 4%, yeah, then you don't need a calculator. That this doesn't make so much sense. Mark?
I think it makes a lot of sense. And I think it's very much depending on which kind of investors you are asking, because there can be different drivers. So if you're just interested in a low risk, long-term cash flow, then co-located storage and solar might be a good idea, where you can reduce your capture risk and get that long-term cash flow. If you're more speculative and you want to be exposed to the market and up-down services and other ancillary services, you might be looking at very high returns without knowing what the future brings. If you are a utility, you might want to use storage as de-risking. It might not even be the return. You might just want to stabilize your return and add some storage and flexibility into your mix. So I think it's very different depending on which type of investors you're looking at. I think maybe we should ask the bank.
So just one question, Mark. So you basically see in the future 2 parallel worlds running. One where the storage is used as a de-risking item, and one where it is used as a standalone, let's say, way to increase profitability.
Yeah, I think if you're looking at sort of classic infrastructure investment long term, then you have to sort of to look at a cash flow estimate for the duration of the asset. And I don't know, let's just say 10, 15 years for a battery. But then you need a return on that. You have to be relatively certain of that. It's new technology, therefore it's probably higher than those 6% that you're looking at from the solar perspective. But you need that with certainty. And in some markets, you might not have sort of a fixed tolling agreement in place. So there is just the market. What you can also structure a way of that with a lease of the asset or something else. And there might be another utility type operator of the assets then is taking the risk on the market. So it's depending on what kind of risk that you want to take, and believing that there are different types of investors capable of taking different types of risk. And I think with storage, you really have to look at it from the ability to handle risk perspective.
Okay.
Yeah, I can confirm from a developer perspective, we work with a range of investors, and there is certainly still high appetite for renewable assets. So solar and wind is very much, worked out for the investors. They're very comfortable with it. The lenders are comfortable with it. And now with storage, we really see a range. On one end of the spectrum, there are the more progressive investors, in many cases coming from outside of Germany. And they have experience with storage in other markets, like in the UK or Australia or similar. And now they see Germany as an interesting market. And on the other hand of the spectrum, there's a very, let's say, conservative financial investor wanting safe, stable, long-term returns. And they still struggle to embrace this new topic. And then, of course, there is all sorts of shades of gray in between. So, but in general, the storage piece is key for the future energy infrastructure. And there is a wave coming. And as an industry, we need to work together and we need to learn to serve, because it will be a large market.
I mean, I find this absolutely interesting. Usually the question I've heard was, what do you think that will rather prevail, whether one approach or the other? But what you are saying is basically that they will be able to run in parallel.
Well,
Depending on the
I think yes, because the fundamental behind both business models is actually the same. You know, we have reached a certain saturation level of renewables, of course, far from yet being at the target levels, where we already see this intermittent character of generation is causing system problems, and it causing both system problems on a country or pan-European level. It causing also a problems on the project level where the capture discount is getting increasingly high. So effectively, both solutions help to address the same problem and create de facto an opportunity for investors to tap on it and, you know, either de-risk their own project with a bit of upside creation from arbitrage when we look at the co-located model, or tap on the wider opportunity and actually capture this immediate opportunity to actually provide a system approach to balancing and to grid stability.
Thank you, Anna. Anybody else wants to leave a comment?
Yeah, maybe I have a question to the round, because basically where we're coming from was a situation with very high prices, right? In 2022, we had the energy crisis. CapEx dropped massively for both PV and battery systems. And this year, I would say we're in the first time maybe back to a bit more stable, more normal situation. So my question would be, can you already feel that, like if you're talking to investors or also from a developer point of view?
Well, from our perspective, if we run the numbers today, especially in Germany, project doesn't make sense. You know, if you see capture price of solar in Germany in the last few months, makes no sense. But we are still investing because we see it as a long-run kind of operation, and things will change and prices will go down. Will be always possibility to refinance projects. So it's, again, to go back also to the original question, what fuels the appetite is always returns. I mean, I heard that lady, sorry, I forgot the name, but they want to invest in Italy. Italy is one of the worst places to invest today. You know, if you see the hypertrophic regulations, the time to market, but capture price in Italy has been between 80 and 90 euro per megawatt hour in the last few months. So that's fueling returns.
Okay. Any counter answer from the investor in Italy on this? Would you like to leave a comment, Chilling?
Solar. Oh, sorry.
So full alignment.
But also on BESS. Okay. I don't want to make a lecture on it. I mean, I'm working in Germany, and so I mean, I'm more expert in Germany than in Italy. But I'm following, of course, I'm Italian, so my country. And also on BESS, if you think about the different sectors and different markets in Italy, are not really helping the price fluctuation and the volatility. So in Germany, with a unique market, you are basically capturing all the volatility of the northern production and the production and the demand in the south. So also on BESS, I'm not super sure about where in Italy a BESS could be really, you know, interesting for a return perspective.
And then, especially, how about the MAX scheme? Because the Italian government is, I mean, especially tenor, they're planning to have a MAX scheme, so expected to be Q125. This could be a 15 years tenor for a fixed tariff for best standalone project. For us, I mean, as an investor, can offset the risk of the volatility of the revenue side, but then on the other hand, there's a large pipeline, also all these Italian way of doing the permitting, all those stuff.
You can badmouth Italy, no problem. You can badmouth Italy.
Yeah, but I also want to understand, okay, but what if with the MAX scheme in the futures, would it change your view of the best futures in the Italian market? Thank you.
I don't want to monopolize the discussion about the Italian market, but of course it will bring another layer in the revenue stacking of a battery, bring more secure returns, banks will be happier, financing costs will go down. So yeah, everything will be probably go in that direction. So I think it's a good thing that the Italian government has with this innovation Maxe program to fuel investment. See, yeah, of course.
But I think what you referred to is also brings another distinction to the strategies for the storage market. The energy market was historically very much regulatory based. Investors are sort of used to stable cash flows, very long tenors, etc. Especially with standalone storage, you have much more volatility that you need to cope with and much less predictability of the revenue stream. You need to mix different revenue streams to make it work commercially. So I think it's also, we do see a distinction in investors' approach with those leaning towards looking on the best solutions only in conjunction with other assets or only under regulatory schemes which are there in some of the markets. But what is interesting is to see a wave of interest into investors willing to take the risk of battery projects being absolutely necessary. And I think here the clear rules of the game and clear functioning of the electricity market itself, the head market, and the spot market are actually most critical for investors to take an informed decision.
I think sort of if you take it really up in the helicopter perspective, I think we've gone through a long period, especially in Germany, where things have been very, very stable. It has been the perfect tailwind. There has been subsidies for 20 years. There's been a stable, relatively stable grid. There has been falling capex prices, and there's been cheap finance. Party is over. Now it's risk coming from all sides. You have volatility in the power markets. You have to go over to a more market-based model because the subsidies is distorting the power market. How do you get that stabilizing factors? That's uncertainty. Interest rates have gone up. Capex rates have, yes, gone down, but for how long and how stable are they with supply chain? So the real question is, how are we going to go through this green transition with added uncertainty, added investor requirements for risk mitigation and complexity, and added investor return demands? I think we're going into a new era in the industry where we can compete directly with the fossil fuels, but it's going to be the big market players consolidating, and it's going to be much harder being a small part because you have to master so many things at the same time. Supply chain, PPAs, markets, financing, construction, developing, permitting, grid. You have to master it all, and if you take it on a project level, you have to master it simultaneously at the same time to get an investment decision.
Thank you, Mark. Yeah, sure, Lars.
I disagree a little bit. I don't think that the party is over. The easy part is over. So we had this protection for 20 years, especially in Germany. And now we see a small big party coming up, which will be the best, with really, really high returns. But overall, what you said is completely right. But this comes with the industry. We're now a full part of the whole economy, and this is what everyone else in the economy needs to master. And we have to master this as well. This comes then with these little ups and downs. So you have seen a huge increase on demand side everyone in China had been doubling their production capacity, which then results in low panel prices, in low battery prices. And now a few companies will survive, which really understand all the bits and pieces of the matrix. And a little party will start for the next 2-3 years, definitely in BESS in Germany. And this you especially learn when you have your ear in the market. A lot of foreign investors are aggressively targeting the German market.
Thank you, Lars. So unless we have been 20 minutes on question number 1 now, so maybe we can move to the next question unless you really want. Okay, all right. So I think it's really good to connect to the second point. So now we touched a bit upon the pros, but you were already mentioning some of the risks and some of the problems. So maybe let's dive a bit deeper in these. What are the challenges then for investors to keep growing the portfolios at the rate that they have been doing it now?
Yeah, maybe I can take it, not from an investor perspective, but again, we're talking to many investors on a regular basis, and the challenges are the new complexity that comes with this technology piece of energy storage. It comes with a revenue stack, and there are, let's say, use cases or business models that are often overlooked or even brushed off the table from the beginning. But let's face it, these energy storage pieces will enable us to connect projects to the grid or to make wind or solar projects even larger. Because also in Germany, where the grid is very strong, we do see regional and local bottlenecks appearing. So there are challenges all over the place, and the industry is figuring them out. But at heart, I'm an optimist. Again, this is the technologies of the future: wind, solar, and battery storage. So as an investor, this poses the question, do you want to embrace it now, like maybe 15 years ago for solar? Or do you want to leave the big pie that is coming to all the other investors that are lining up? And again, here I see some German investors kind of conservative and waiting and analyzing, and foreign investors from the UK, from France and other countries, from Denmark, they really have seen Germany as one key market in Europe, and they are stepping in. And maybe they're risking a bit more on the first small project, not to get the high returns, but to get the learning curves for the scaling projects of the future.
Yeah, I think you touched a very good point, the fact that we have to learn from what happened in the past. And let's learn on BESS in UK, for example, what happened. Now BESS facilities in the north of Germany are curtailed, and nobody was expecting that at the beginning. So, I mean, it's not only about challenges, it's also about how do we learn and try not to make the same mistakes. Especially because, I've been in this industry for 22 years and I've seen everything. I mean, I've seen retroactive cut-off feed-in tariffs, I've seen market collapsing, I've seen companies going belly up, I've seen company like revenants like as a phoenix, you know, and in Germany, especially in Germany, I mean, the market was very quiet for many years, and a lot of people and professionals have left the industry to go somewhere else. So, yeah, challenges, yes, but especially learning.
And I want to highlight another important point, in my opinion, from the system perspective. So if we're looking into sustainable investments into renewables, so mostly speaking about PV there, it will be key not only to bring these battery systems online, but also to provide all sorts of other flexibility. And I think currently we're lacking behind there in Germany with the smart meter rollout. So we need a lot more of demand-side response and a lot more new flexibly or flexible assets in general. Like that could be electrolyzers in the future, for example, where we see huge upsides, also stabilizing the capture rates of renewables long term to keep them investable. Because without this, we don't really see a bright future for PV and wind.
I think sort of looking at the risk perspective, it's already added sort of to the complexity and uncertainty, but I also think this interactions where solar industry has sort of been a little bit of an isolated industry earlier. Now the solar industry really have to learn to work together with other assets, not least wind and storage, and trying to get a profile. But there's also the entire demand side, which is really changing, where we had sort of a stable demand for a long time. I don't think that there's anybody that can really predict to what extent the demand will be increasing and where it will be increasing and when it will be increasing. And that sort of creates this chicken and egg situation on the markets. And I think we for sure is going to see a lot of changes going forward also in the market. We can see the storage market is different in all European markets. We can see these clusters of hydrogen PTX coming up, data centers coming up, electrification coming up. And I read an analysis recently about the AI computer demand, which was really interesting. And there was a risk analysis with it. One said likelihood and one said severity. And both topping out on that was access to renewable energy. So there's going to be a shortage of energy. So there's for sure going to be a party, but it's going to be a more complex party. But there's a lot of demand out there. And I think the big risks is actually managing all of these rotating parts in a fast-growing market. And this allocation of risk, who's taking what risks?
Okay, thank you. Maybe I wanted to ask a follow-up question on what you mentioned, Hannes, before. Basically, you're saying that a lot of investors are now approaching the storage investments for the first time, and they kind of want to do some pilot investments, let's say, to get the learning in. So maybe opening a bit to the wider panel, who are these investors that are willing to take, let's say, such a risk or enter a new world by having these pilot programs? And maybe how do you see them doing it?
Yeah, from my side, I would reiterate the ones who are taking the risk are the players from mostly outside of Germany, and they have experience in the UK. I keep saying the UK in this BESS topic and co-located topic is like 4 to 5 years ahead of Germany in this very part. Yeah, and they see Germany as a large market, and they are ready to put some money on the table and to say, go out and develop a pipeline. So, yeah, that's my answer. But I don't know, Lars.
Yeah, what I see are, the classical big players from outside, so state funds from Scandinavia, but also there are constitutional investors from Germany already looking on it, because they already learned if they are first movers, they get the higher return. And that's maybe a little bit the problem in Germany, that we want too much red tape and security and de-risking around it. But every de-risking costs. Yeah, every de-risking costs. You need to be first mover. And this, especially in BESS, now offers the best opportunity for everyone. And like we said, you're from a bank, and if you more or less build up a pension fund or something, you put a little bit, 30% in this, 30% in traditional PV and wind, and 30% in maybe in stocks. But you need to have a part which is offering high returns.
Better Energy, we are one of those investors in trying to invest also in storage. And do we need to test the IRR on it? Of course we do, but it's not the real driver. The real driver is the ability to deliver the demand required in the market. We have to sell the power from our projects on corporate PPAs. So either we do pay as produced and take the risk, or let the investor take the baseload risk, or we take the risk as a power seller, trader, and that is where so storage is also a de-risker, something that balances your profile, something that balances the grid. So it is a really interesting, like from some people see that's very risky, other people see it as a necessary de-risker.
Yeah, and you asked the question of who the investors are. I think a good starting point would be to look at the folder from this conference, because I think the organizers have done a good job in attracting some of them. We have Big Green here on the stage. We have EDP, who is advancing with their 50 megawatt project. We have Greenvolt, who was the big winner of the Polish capacity auctions, and many more. So I do encourage you to sort of use the opportunity in the networking breaks as well. And you touched upon a very, very important point on sort of the investment case being front-loaded here and the big first-mover advantage. And I would probably pass to Aurora to comment on that, but we do see it in Central Europe as well. The big opportunity and the big cash flow, effectively, seems to be in the nearest rear to come. So clearly, those who are brave enough to invest are quite likely to benefit. And we've seen a massive drop in capex last year. Just as an illustration, a drop in capacity premiums in Poland for storage was 40% year on year. So effectively mimicking the equipment costs. So these are the developments that are here and immediate. And I think we need to find immediate solutions. Investors need to take probably some risk on the investment decisions. Banks need to take some risk on lack of contracted revenues for the entire lot, and that's the new rules of the game that we need to apply. Luckily, we have gradually learned to apply those new rules already in the past few years. I still remember when, was it 5 or 6 years back, I was doing the first merchant project, financing the first wind farm merchant project in Central Europe, and people looked at me like crazy, that's not going to be bankable. Ultimately, we managed to attract the two commercial banks into the picture as well. And since then, we have seen both, short projects based on medium-term PPAs, projects based on route-to-market PPAs, cross-border PPA in Croatia, as well as several merchant projects. You can speak to my colleague Joel, who has recently done a merchant project in Romania. We have done in Estonia and Lithuania as well. So those more flexible strategies of the investors are already meeting at least some response from the financing side as well. And I think that's bound to be the solution for, at least for the standalone storage. For co-located, it's much easier because you can treat the inefficiency of the existing solar plant as kind of revenue stream that fits into the equation and is nearly contracted one, while for the standalone, effectively the stack of the revenues allows for predictability only on a portion of that.
Maybe to add another point on what you already raised earlier to this first mover advantage in the BESS space. Yes, very much so. but also we have this new possibilities emerging that stem from providing system services. So we see inertia and black start capability auctions in Germany, reactive power, to mention a couple. So we have some more revenue streams even that could stack up and maybe further boost these business cases, even if now we have this big wave of big battery projects coming in the system. Even if these flex markets get more saturated, let's say towards the late 20s, there will be some more opportunities, even I think making that even more attractive. And I forgot to mention, of course, the potential capacity market from 2028 onwards for Germany. So all quite exciting, maybe smaller opportunities, but that could definitely also stack up.
Yeah, but these backup services, they are just a small portion of the revenue stream, and more and more batteries in the system mean that even there the returns will decrease a lot. And if you look on that market, that hasn't a significant growth in the last 10 years. So more batteries will cannibalize the price, especially on services. You will make your profit only from the arbitrage business, from trading the energy at the right time.
But also certain thermal capacities will leave the system, right? Leaving room for some batteries to provide inertia, for example.
Yes, but this is a small portion.
Yeah, I just want to add, we should not forget that these assets and these projects, they don't appear overnight. And then when the revenue stack is ready, then the asset is there and ready to be connected to the grid. These developments take time, usually something between 1 year and maybe 3 years. It can be a little bit more, a little bit less. But again, it's important to now start developing those assets more and more, so that in the future, at least they are storage ready. So this is what we do with our solar assets, and we have to put certain things in place in the development journey so that at the end there can be a battery. Because what I don't want to happen is in 3 years' time, I have a nice 20, 50 megawatt solar park and not the optionality to have a storage added to it. So let's not forget this takes time, and it's important to put certain things in place now or early so that in the future we can all participate in this new world of energy storage.
Great. Thank you everybody. Just being aware of time, I think we started a bit later, so we can maybe take a few more minutes. I'm asking the organizers. Maybe a few more minutes.
Sure, you can finish your speeches.
Okay, perfect. Then there are maybe a couple more points I wanted to ask to the panel. One is about bankability, definitely, but would cover it at the end. Just before, so we talk a bit about the investors and who is coming now to this industry. Do we also see investors from completely different industries now approaching the energy industry, the energy infrastructure industry, let's say, because of BESS? So, for example, it could be any other industry. It could be, I guess, trading or anyone coming from more like IT-related industries.
I can answer no. So these are players that already have exposure to solar or wind, or they have, let's say, a trading desk, energy trading already on board. And some utilities, and yeah, from my perspective, that's pretty much it. So we don't see any completely new outside investors, and maybe what you refer to, like software businesses and the Amazon, Google, Facebook, etc. We see them as off-takers of
data centers,
PPAs. Yeah.
Yeah, I agree. I don't see, like for solar or wind, completely different kind of industry-related investors coming. but probably it will change as it was like this for solar 15 years ago. Now solar is a business for pension funds, and before it was only for risk adverse non-risk adverse companies. So yeah, I agree. For now, BESS is not something for people completely out of the business, but it will probably level it down in the future with like tolling, with capacity markets, and with the decrease of arbitraging. That will happen, but probably not 5 years from now.
Well, the only sort of cooperation that I see other than on the offtake structure is some sort of cooperation between the EV models and storage models, but it's more like creating JVs rather than one group of investors entering the BESS segment.
I'm sort of building on that. I mean, I see more connectivity, as I was alluding to before, between different types of assets. But I really think storage is the interesting part. I'm thinking of renewable energy or regenerative energy. If we think of it as competing against fossil fuels, providing a new energy system for this globe, then we need cheap and reliable. And we already have cheap. Now we need reliable. And storage actually gives us that reliability. And therefore, I think this interconnectivity and seeing the energy system as a whole, both on the production side, on the market basis, and on the demand side is really key. But it is the big utility energy players in there. And if there's somebody else coming from the outside demanding it, maybe it's the demand side as the new players, because there is some big consumers coming in PTX and data centers and other things. And some of them are investing in storage and solar assets to generate that power themselves, so being in control. But other new players, no.
Thank you. All right. Anything about this from the audience? Of course, feel free to raise your hand. Otherwise, we will go to the next question. So maybe next and last question about bankability. I think it is paramount to everybody in the industry that the projects become bankable at the end. Otherwise, things won't move. So what is your view on the bankability of both standalone and co-located storage systems? And let's say, maybe what is the view, what's happening now, and what do you think will happen in the future?
I think short answer for me is standalone is a pure equity play. There might be some debt in there, but it's primarily an equity play. If you talk about co-located, I actually think that storage enables more bankability rather than introducing more risk. So I think it makes projects more bankable, maybe not on an isolated project level, but especially on a portfolio level.
Well, I slightly disagree. Well, last week we just refinanced a 200 megawatt BESS in UK with a Spanish bank. So probably the key word is refinancing. It's an equity at the beginning for sure. So the bank doesn't want to probably get the risk of construction. They want to see the asset running, how you run the asset. Each of us investors, we have our own algorithm or route to market operator. So probably refinancing is the key word today on bankability.
But does it have a long-term contract?
Sorry?
Does it have a long-term contract?
10 years.
That makes it bankable. Otherwise, yeah.
Yes, so you have floor price fixed. Okay. But for financing, what makes BESS bankable? First of all, there's a Bloomberg list out for BESS producers. That helps a lot. On the other side, it's the floor price, and in Germany, you have big banks that already announce, more or less official, that they are willing to finance the first 100 mega try. So they're going to be first movers, and in a much mature and educated market like the UK, we learned from you, 200 is doable, and I think we will see the same in Germany the next year.
Representing bank, I can say that co-located is clearly bankable already now. And if the project comes now to banks, I'm pretty sure it will, even sort of pre-construction, it can secure financing. On the standalone, I would say it's a work in progress. As a development bank, we clearly are advancing on some of the initial transactions already, and would hope they will materialize not later than next year, but hopefully already this year on some sort of standalone best bank financing. At this moment, it was said earlier, it's not 100 or majority contracted revenues. We can forget that. We unfortunately can also forget sub 20% equity contribution. The structures we are talking on BES are much less leveraged. But I would say even in short term, standalone BES would be able to can be co-finance on the project finance basis, and I'm sure as the business models develop and we have the pilot project having proof of concept, then we would also have more template solutions for financing. At the moment, it's very case specific because each project is based on a slightly different business case.
As we started with a little question towards you, maybe it is even now your chance to vote. Who of you would invest in a BES standalone, and who of you would only invest in a co-located? Maybe you raise your hands. Okay, let's take Germany, and we start with first the standalone. Who would invest? And who would invest in a co-located? 50-50 only, and the co-located is the de-risk one. We had proof from you.
Well, but your question was co-located only, so I guess maybe that's what some of the audience has replied to.
Okay. But at least a third of you would invest.
Better than before.
Better than before, it was only you.
And you've heard from the S&P speaker on the last panel that it's bankable already as well. So that's good too.
So at least we convinced a third of you. That's the good part. And we will still be here. If you have further questions towards us, happy to reach out to us.
Absolutely. I mean, I think we can maybe, anybody who has questions, we can open a very brief, quick Q&A. Let me come there.
Thank you very much. Hi, everyone. My question is, we heard a lot about the appetite towards investing, and I think we talked a lot about the CapEx, so the investment in the actual asset. What about, I'm coming from a operational perspective, how do you think about the 15, 20 years of lifetime? Is there also an appetite or a willingness from an investor's side to maybe have higher OPEX costs in the beginning? Because compared, for example, to a PV plant, you more or less know what happens after 15 and 20 years, what costs to expect. But obviously in BES, since the technology is so new, my question would be, is there a willingness to also accept higher prices for OPEX in the beginning?
I think it's fair to say that one of the issues with investment case in BES is that there's tons of uncertainty. There's uncertainty on the revenue side, and there's uncertainty on the cost side, and that requires a higher return. Just what does it actually take to operate a BES to achieve those revenue is associated with a lot of uncertainty, and how much operations and maintenance do you need? So there is a lot of uncertainty because of lack of experience in it, for sure.
Yeah, and adding to that, my observation is this is not yet figured out by the industry. So there are, let's say, initial rule of thumb approaches and not very sophisticated and on the conservative side. So for example, to say have 2% of the capex in the OpEx part. This is a typical number I hear pop up often, but I think this is something, again, the industry still needs to learn and to figure out. But it was similar with PV. So yeah, the initial OpEx or O&M costs were assumed very high, and they have come down over time as the industry has figured it out and matured. And I think similar things will happen to storage. And then I think the biggest question is if and when to replace the cells over the lifetime. But hopefully by then your business case is already through.
Okay, thanks.
Thank you. Any other question?
Thank you. So, Farid from Afrim Management Consulting. So, my question is to Lars. I agree with you that in the long term, the value is in the arbitrage for batteries if we're looking at conventional revenues. But I was not following the discussion fully. Like, are you saying that you see it as a risk that revenues are dropping for batteries, or do you see it more that there will still be a demand growth for arbitrage in Germany given the renewable deployment and given the coal Ausstieg? So was not sure I followed the point. Like, do you see it as a risk that there's cannibalization, or do you still think that there's enough volatility that batteries will still be able to do a profitable business case?
In the arbitrage, I don't see it as a risk. It's just the development of, let's see, the systematic behind it. But on grid services, I see that there will be dropping prices due to more batteries, and that's the cannibalization that I mean.
Okay.
So I don't expect much revenues from grid services in 5 years.
Okay. Yeah. Okay. Thanks. I agree with that.
Just a few words. It's funny that now we are already thinking about cannibalization and problems on batteries where there are no batteries, like in Germany, for example, no, like a few of them. So yeah, I mean, of course we have to think about the future, but the real point today is about when you reach the COD with your project, because there are, for example, high voltage connected project that has problem with supply of transformers, for example, no, and so it's a combination of things, actually. It's not so straight that the arbitraging will be decreasing, and because it depends on when all these batteries will be deployed. I mean, I have an incredible data that when I say it, nobody believes me, no? But we received an information from EDIS, it's one of the DSO in Germany, you know? It's covering a big chunk of Germany, but not a big one. They received 187 gigawatt of BESS connection requests. Maybe now it's more, because it was 3 months ago, so maybe now it's more. So, I mean, that's interesting to know, no? That there is something going on, but when this 187 gigawatt will be COD, nobody knows. How much of this gigawatt would be just developers trying to reach project rights and sell them, or like develop and flip? How many of those? It's completely very hard to know.
I agree. Just to continue on your point, I mean, most of the questions we get from the investors is about this cannibalization and if we can defend the story. So, I mean, our modeling experience, given the fact that we're modeling the whole European power network in details with intraday FCR, FR, we still see that there is this demand growth for volatility, and grid connections, like you said, is the, let's say, the mine for the future, because it's so rare that everyone wants it. So I'm wondering, IDRI, how they're opening these applications. I wonder if you can ask them next time, because I think at the end it's the people net. It's going to be a people's job. The person who knows the DSO is going to get his application open. But let's see how the future is going to unfold in Germany.
Thank you. Any other question? Don't be shy. All right, then I think we can bring it to the end. On my end, I wanted to thank Tanya for organizing in the past month. She was always extremely quick in replying and very helpful when we invited some stakeholders to the conference. And a big thanks to the panelists as well for providing your opinions.
Thank you, Fabio.